Sorry about that. My OBS got cut off. So anyway, as I was saying, right. So you look at this and you go, okay, it's hitting it, but did it really break a downtrend here? Not really, not yet. It's going to. It looks like it could, uh, but not yet. So these are the two biggest things when it comes to charting. You want to see is the chart or the stock in an uptrend? Like you could see here clearly, it's in an uptrend, right? Or is it in a downtrend like this? Once you start seeing this, um, it'll help you with buying dips because a lot of people make the mistakes, like I was saying before, of buying dips on a stock that's, um, going down, and you're endlessly buying dips, buying dips, buying dips, and you really should not be buying at the time that you're buying. So let's go into just one more example here. I'm going to bring up, let's think of a stock. Let's go to HEPA. This is one that I really like, and I'm looking into probably will be the next uh, nice size swing. So first thing that we're gonna do is we're gonna look at the daily chart, right? So the daily chart says HEPA's bottom right here is right around, well, technically the complete bottom is 12 cents, right? But this is the day after an offering, so you could clearly see that that price has not come back. So the next thing is to look at is what is our next level of support, right? So our next level of support is right around here. See how the bottom of the wick hits here, here, held here, held here. So your bottom right here is 15,558. Okay. So HEPA, if we look at it from what we were playing before, HEPA has strong support in the mid 15 range. Okay. So the best way to add it is if you were to get mid 15s, right? As close to this price as possible, because the chart says that you have a very high probability that the stock will not dip below that. And if it does, it will go right back up and it holds there. Okay. The next thing that you want to do is chart out what is our first level of resistance. Okay. So our first level of resistance, we're going to look at the tops of these here. You see the top of this candle. You're really just, I'm just using this, line here, but you're really just looking at what is your uh, range of what the stock trades in. So we call it demand zones or loading zones. So right here is a loading zone between 15,558 and 18.6, right? So you want to get it as close to the bottom as possible because if you can get, um, as close to 15 as possible, you're talking just to the top is 15% gains, right? Now I talked a lot about this with MGoal, where you would buy these bottom dips here. If you're patient, you buy these dips here. You could always scale some out on the pops because each time this happens, if you look at it just from let's say January 27th, so you're talking, let's just say a week and a half. Look at how many times it's popped over that and came back down, right? If you would have just bought it here, I mean, this day it made a massive move, but if you take it afterwards, you have it popped up here to 20, came back down, right? You hit 16, mid 15s again, rejected this 18, right? So you scale out, you buy here, you scale out some pops here. That's almost a 20% pop. Comes back down again, right? You buy it, you buy it again. You would be up another 12%. Now, the thing that I recommend, especially if you're new, because it could take time getting used to this, is you don't want to sell your full position really ever because, again, unless you're happy with, those gains, which is fine. But if you're looking to maximize the most amount of money that you can make as possible, you want to set a certain percentage of your what they call a core position. So let's just say hypothetically, um, my I wanted a 50 could be any amount. I'll just use a 10,000 share core, right? Which is probably what a lot of new traders are trading with, maybe a bit more, but I'm sure a lot of you aren't going too heavy, which is fine. But even if you are, if you're doing 100,000 shares, it really doesn't matter. You want to set a certain percentage of that to where you sell these pops and buy those dips. So maybe out of the 10,000 shares, you take 2,000 and you sell it on these pops. Then if it comes back down, you take those 2,000 again and you buy it on the dip again. And you just keep doing that over and over. Uh, Sometimes, it's all relative to the stock itself. So sometimes you can do this 3, 4, 5, 6, times before the stock actually makes its move. These pops here add up because eventually what could happen is uh, you're essentially just riding free shares, right? If you took 2,000 shares and you sold the pop, then you bought the dip, and then you sold the pop, and you did that 3, 4 times with 2,000 shares, your 10,000 shares eventually are going to come free, right? So this is just a way to maximize your gains. But this would be the first thing. So we're looking for HEPA going into this week. We want to add as close to this 15,558 mark as possible, right? Low mid 15s. I don't know if you're going to get that, but you want to add as low as 15s. I added mid 17s, okay? But I'll add mid 16s all the way down to mid 15s because the truth is you never know if it's going to go down. So you want to scale in. Maybe you buy 3,000 or 5,000, whatever the case is, shares here. If it goes back down, you buy another bit of shares. It goes back down, you buy another bit of shares. Just so that you have a good average, and you're trying to, you're not all throwing all of your money in at one price. Because if you bought in full, let's just say at 17.5 and it dips down, now you're sitting on a stock that's down almost 10% when you could be adding these dips down here. So that's the first thing that we want to do. Here is your support. Here is your first level of resistance. Okay. Now, if we go into a lower time frame, we look at it and we see, okay, it's a lot easier to see that the stock just trades in this channel here, right? It goes in, it comes up, it goes down, but it's just trading in this channel. Very hard to get anything down here. If you didn't buy, other than the first time it ever went down here, it's never dipped below this again. It may never dip below this again. It's very possible. So, what I like to see when it comes to charts are you look at your moving averages. Okay? Like I said before, these are the moving averages that I use here. Feel free to pause the video and add these onto your charts. But you want to play these moving averages. Other than these lines, these moving averages are all supports and resistances. Okay? So, other than the chart itself that you're drawing, you have the resistances of these moving averages, right? So you have VWAP, which is probably the biggest indicator and most efficient indicator, in my opinion, because it's very universal for every stock, and it's something that is the most updated in real time. Because what VWAP is, if you guys don't know, it's essentially where do most people own the stock? It's a volume weighted average price. So where are the most buyers or sellers around the stock? So right here you see that the average is, let's just say, 17.3. So if it breaks through VWAP and holds it, that's big, because that means that the people that own this stock around this price are not willing to sell it. If it can't break through VWAP, that means that the people that own their shares around this price want to sell it and want to get out. So VWAP is probably, a lot of people don't even use moving averages and they only use VWAP. Okay? So you look at this time frame, we go, all right, let's draw HEPA together. So we see this big wick here, see a big wick here. Let's take our trend line, okay? And let's draw where HEPA is having a hard time breaking out, right? So you see how it hits this trend line 3 times. So now it's easy for me to see what this trend line does. What am I looking for going in? Bounced off of it here once, bounced off of it here again, bounced off it here. So we got almost 3 times it bounced off. But you see that it's heading really close into a point where it's got to pick a direction. Is it going to go down or is it going to squeeze up? Well, based off the chart, tells me it's going up because nobody wants it below this price, right? If it get anywhere near this, it's getting bought instantly. So eventually, what happens is the stock, cools off enough to where it'll test this trend line, and because the trend line is going down, it's getting essentially, in a way, easier and easier to break because the price, like you see here, let's just say it was 18.7, right? Well, the trend line here is now 17.6. So it's getting easier and easier to break it because the trend line price is getting lower and lower each, in this case, hour. Okay? But you can do this off any time frame. It'll go off 15 minutes. You see here, it's the same thing. If we do it off a 5 minute, if we scroll off, it's the same thing. So this is probably one of my top watches going into this week because the chart itself is very nice. It has strong support. It's getting ready to test that trend line break. And if it breaks this trend line here, right, let's just say it breaks it right here, we could see a serious move up. Just like MGOL here. Broke that resistance here, and it, let me just put this up. Broke that resistance here and went up. So when you're looking at all of your charts, you want to try to do these things because this is the biggest stuff that's going to help. Like I said, I just wanted to make a basic one for you guys just to show you supports and resistances. And when I'm talking about trend breaks, that's another thing. Like if I'm just going to pull up MGOLD just because it's easier. But, I talk about it a lot, trend line breaks, right? So trend line breaks could be intraday. They could be things that are happening within an hour-long period, right? If a stock has a lot of volume and it's moving up and it's moving down, you can play these trend line breaks, right? So like if you look at, let's just say MGOLD here, this is the middle of the day, bam, it's 44 cents. Topped here, broke there, okay? You see, this is your downtrend right here, okay? Broke, couldn't, it topped off here, rejected, came down, came up, rejected, came up again multiple times, rejected. I mean, look at how many times the top of these candles hit off this line. I mean, you're talking almost 10 times. You have 3, 4, 5, 9, 10. It actually is exactly 10 times. And then what happens the second that it breaks, right? The stock makes new highs. So if you were just playing the stock in the middle of the day and once you get really good at charting and you can see this in real time, you can play these breaks to where it goes up, and you would have made, in this case, 40% just off of that downtrend break. Because the stock here would have either what happened, it would have either went one or two ways. It would have kept rejecting and it would have came down because the selling was too much for the stock to handle, or would have broke and it would have went right up. So these are just little things that you want to take a look at. I would go into charts and look at this and just say, all right, well, mess around. Look at it. It takes a lot of work, guys. You have to study. You have to look at it and say, all right, well, look at the volume on the high volume stocks for that day and practice. Practice doing trend lines. What happens when it breaks? Oh, it broke right here. I could have made a 40% move here. So even though you didn't get an MGOL at, maybe you didn't get in at 11 cents when I was pounding the table on it. Maybe you were just trying to make some gains on it. You still could have made a ton of money on the stock. It dipped down a ton of times, right? So I would just look into things like that and practice drawing trend lines. You could do this. There's so many different ways to do it. It's not always downtrend breaks. It could be uptrends. I like downtrend breaks just because um, on stocks that have high volume, I just feel like it's pretty easy or easier to do, and it's a lot uh, safer in a way. And because worst case, if you played MGOL here, right, you broke this downtrend, and the stock was at 38.5. Worst case is it rejects and it comes down, you sell it maybe right, and you cut it right away for a small loss. But what's best case scenario? A 5% loss for a 40% gain? I would take a 5% loss for a 40% gain. That's what the stock market's all about when we're trading. We're not holding these long term. We're just using them to make money off of it. So you want to always look at what's your risk versus reward. UPC is another one, right? UPC, now this is catalyst based, so it's a little bit different. But you look at UPC and you go, all right, well, I know they're going to be listed on Monday. So if I bought the stock here at 17, what's the worst case to happen? It's holding this trend here, right? Worst case is it breaks this trend line, which let's just say you bought in at mid 17s or whatever the case is. Worst case, it breaks this trend line and you sell it for a small, 5% loss. But what's the best case? Best case is it what? It holds it and goes up, maybe 15%, maybe 80% or 100% like it did here. What's your risk versus reward? Before you take any trade, especially if it's a swing position or you're looking to enter anything, look at what your risk versus reward is. If I was buying a stock here at 30, am I confident that it's going to go another 80%? Not really. I don't want to buy this here, right? Not necessarily. So you want to always look at what your risk versus reward is as well. I hope this helped, guys. I'll keep making these videos, but I just wanted to keep it pretty basic and give you just some basic 101 charting techniques for language and what it is that exactly I'm talking about. I hope this helps, and we will see you guys next week.